Welcome back to another episode of Salt, Pepper, Wisdom. I'm your host, Mr. Wisdom, here to sprinkle a little brilliance into your day. Buckle up, because today we're diving into the mind of the Oracle of Omaha himself, Warren Buffett. We'll explore 9 common investment mistakes and learn how to avoid them to make your portfolio as successful as his. Stick around till the end, where we'll have a special quiz just for you. Let's see if you can crack it. Cash. The elusive creature that Warren Buffett despises. Buffett believes
we would never have cash around just to have cash.
That's right. He thinks keeping cash just for the sake of having it is a waste. Cash should be working for you in productive businesses. So if you find yourself hoarding cash, remember, Buffett doesn't like it, and neither should you.
Cash is lazy.
Next up, we have the market condition. Buffett and Charlie Munger don't bother predicting market movements. As Buffett puts it,
Charlie and I never have an opinion about the market because it wouldn't be any good.
They focus on evaluating businesses, not the whims of the market. So if you're wasting energy trying to forecast market trends, Buffett would tell you to cut it out.
Focus on businesses.
On to diversification. Buffett believes in putting a lot of money into things you understand deeply. He says,
diversification is a protection against ignorance. It's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses. Do I need to own 28 stocks in order to have proper diversification? 3 wonderful businesses.
If you know a business inside and out, why scatter your investments? So don't follow the crowd into unnecessary diversification. Instead, invest heavily in what you know best.
Know your stuff.
Let's tackle risk, Buffett argues.
Volatility does not measure risk.
He believes real risk comes from the nature of the business, not its price fluctuations. Don't mistake price swings for actual risk. Understand the business fundamentals.
Risk is equal to business nature.
Now, let's chat about IQ. Buffett claims,
it's a temperamental quality, not an intellectual quality.
you don't need a high IQ to be a great investor, just a stable temperament. Buffett values rational thinking and emotional stability over raw intelligence. So, keep your cool and think clearly, regardless of your IQ.
Stable mind.
Correct.
Moving on to asset allocation. Buffett laughs at rigid strategies like 60% stocks and 40% bonds. Instead, he believes in having a default position in short-term instruments and investing intelligently when opportunities arise.
When you talk about asset allocation, it's just merchandising. It's a way to make you think that if you don't know how to determine whether it should be 60-40 or 65-35, that you need these people. You don't need them at all in investing.
He says, so don't get caught up in arbitrary percentages. Be flexible.
Flexibility rules.
No fixed plans.
Day trading. Buffett sees it as a form of gambling. He notes,
Day trading, I would say, very often came very close to gambling.
it's driven by the human desire to gamble and is not a strategy for long-term success. Instead of chasing quick wins, focus on long-term investments. So, avoid the casino and stick to smart investing.
Gambling, not good.
On to growth stocks versus value stocks, Buffett says.
I've really said that growth and value, they're indistinguishable.
To him, growth is just a part of the value equation. If a business grows without adding value, it's not a good investment. So evaluate investments based on their ability to generate value, not just their growth potential.
Value first.
Finally, don't wait for a market correction. Buffett advises, if you've identified a great company, just go with it. Waiting for a better price is often a futile exercise. Invest in companies you believe will be great for decades, and don't waste time trying to time the market. And that wraps up our dive into Warren Buffett's investment wisdom. Now, for our quiz question, Warren Buffett is known for his frugal lifestyle, but he once made an extravagant purchase to celebrate his success. What was this purchase, and what did it symbolize?
Think hard.
Drop your answers and creative comments in the comment section below. We'll showcase the top 5 viewers with the best comments and correct answers in our next episode. So, get writing and let's see who gets it right.
Can't wait.